All right, so welcome to today's Monday Morning Mortgage Updates. We have a lot going on. So all of you are probably wondering, how am I going to have to change my business style now that the NAR has basically had that 481 million, I think is the settlement amount for that lawsuit that was filed. So we're going to jump into that a little bit first, and then we'll go into rates. So let me go ahead and share my presentation here from the beginning and start with March sadness. I have to say it is March sadness. We all expected a while back to get some really good information on inflation and the Fed's cutting. They projected the end of last year, that they'd cut 6 times this year, and unfortunately, that is dwindling down to now potentially only 2 times that they are going to be cutting rates this year. So it's been quite the change. And we're going to go over that in just a second as well. And let me go ahead and just jump in. So first off, let's go ahead and go give you a NAR update on the lawsuit settlement. What is it going to mean for you? What's next? These are the big changes we need to go over, but I want you guys to know that the court still needs to approve this settlement agreement. It's not a set in stone as of right now. Most likely will be, but it still needs to get the court approval. So it's also not going into effect until July. So we've got some time to really figure this out and kind of hash things out on what's going to be happening next. So major items we need to really focus on that are the biggest changes is no more advertising commission in the MLS. So when we previously had the ability to put in, we're only going to offer you 2.5% or 3% from the seller side. Now it is pretty much nothing. So in your MLS, no commissions are going to be posted at all. You need to figure that out outside of the MLS. And you're now both going to have to do your own agreements with both the sellers and with the buyers, depending on who you represent. So it's going to be very different moving forward. So now what's going to be needed is a buyer broker agreement all the time. So this could be a good or bad thing, right? Before, a lot of times a buyer broker agreement or the agency agreement was not signed by a lot of people. They didn't want to have that pressure of saying you have to just use me or feel like you pigeonholed. Well, now it's going to be mandatory. You're going to have to determine what your commission is going to be upfront when you're working with the buyer. So a big difference moving forward. And now we're going to talk about how to get that paid and what the options are there. But Karen, hey, this is kind of what happened. So $418 million settlement goes into effect in mid-July. The cooperative compensation agreement means one that was coupled is now broken apart. So now there's a section for the buyers and for the sellers as far as how they get paid. Prohibited to show it on the MLS, but allowed to have a buyer's agent compensation off the MLS. So you can still get paid. You just have to have that agreement outside. But the media guys is being terrible with this. They are absolutely missing the whole boat on this. So I read a bunch of articles. And the biggest problem we have is the media is saying it's going to be better for buyers and cheaper for buyers overall. And that, I think, couldn't be further from the truth. And we'll get into that in just a little bit. But the media is just frustrating. So we're going to go ahead and dive into a little bit of that later. But yeah, it's just been aggravating to listen to what they're saying. But we'll go into that in just a little bit. So what does it mean? Buyer's agent compensation, it can be paid for the buyer. We knew that was going to be coming. And you have to negotiate it. So we're going to really have to, dust off those negotiation skills because we're going to have to negotiate your compensation when you start working with the buyer. And then it's going to be interesting to see how the underwriting changes to this. And we'll go over that in a second as well with regards to how much seller contributions can be given on particular loans. But I believe this will raise the cost for buyers. If we can't work that commission into the deal, it's going to be more expensive for the buyers. So also a lot more negotiating. So sellers may be a little bit more flexible on what they're willing to do on price because all they have to pay is 3% as far as the given. But again, a lot of negotiation, much more negotiation now than ever before is what's going to happen through these transactions. So buyer's agent perform a lot of duties, guys. You have value. You need to show that value more than ever. You have to court. These are the things that a lot of people think. They think the media is terrible at this. They're like, well, you can just find a home online. Yeah, but coordinating to see the property, access to the property, negotiating. We all know that the listing agent, their primary goal is to sell that home for as high as possible. So right out of the gates, they have an alternative motive, can't speak this morning, to get a highest price possible, where a buyer's agent is trying to get the lowest price possible. So there is a very big benefit in having a buyer's agent involved with that negotiation. Setting up inspections, appraisal access, education, and guidance to the buyer, all very important that a buyer's agent does. Organizing the utilities and insurance, orchestrating the transaction, the mortgage closing, everything that a buyer's agent does needs to be shown as what your value is, so you can show your value prop. So putting in, a dollar amount on the buyer's agent function is hard to do, but we need to make sure we're showing that. So what does this now look like? We are the wild, wild west in regards to how you get paid and what you get paid. So it's going to be interesting to see what's going to happen moving forward. And let's kind of have a look at that. So be prepared, because now the buyers can shop realtor rates, just like they do mortgage rates. They can go up to you and say, well, how much are you going to charge me? And they're going to be able to do that upfront, because this is huge news and everyone's watching. Buyers are going to think it's going to be super cheap now, and they don't understand, but they're going to be shopping, and you need to be well armed to know how to debunk all of the bad information that they're seeing out there. So what are these next steps? First off, we need to sharpen those negotiation skills. There's a lot of books on this. Read books, become an expert. If you already even if you already think you are an expert, there's always something we can learn, because negotiation in this market is going to be even more important than ever. Those days of just kind of being a good friend to the buyer, taking them out, regardless if they're pre-approved, regardless of what, anything, just taking them out and then winning their business over the time that you're showing them properties, that's done. You need to negotiate up front. You need to get buyer broker agreements, because otherwise it's going to be very difficult to have that conversation. So a lot of things need to be done up front. We're going to see how this all shakes out, because it's going to be interesting how the consumer absorbs all of this. So this is going to be like a fluid process to learn. But what is your value proposition? We really need to take this into consideration. Put together a really strong presentation for your buyers now. Maybe you didn't have one before. You're most likely going to need one now. Explain why you're worth that 3%, because there will be discount people out there. In the mortgage industry, guys, we all sell the same products, but there's discount people out there doing it for super cheap that don't give the service. So we've been doing this for a long time, trying to show what our value proposition is. You're going to need to do the same, because there will be people popping up everywhere. Flat fee. If it's a listing agent, we'll manage your buyer side for you for a flat fee of $500. Those are going to be crazy stuff out there that you need to overcome. So explain why you're worth that 3%. So now what? Now that NAR has this lawsuit and there's a settlement, now what? So we need to talk about this, because the seller credits can be used to pay commission and closing costs. So we're going to need to negotiate the seller credits. If our buyers don't have that ability to bring that money up front, we need to negotiate with the seller. We can still ask for the seller to cover all of the commissions. So it can still be 6%, 3% on each side. And we can still ask the seller to pay for it. So it's going to be part of the negotiation. That's not going away. How much we get paid is not going away. It's how we structure getting compensated. And again, we can still ask the sellers for everything. So just keep in mind, you're not getting paid less. It's getting paid differently. Yes.
Should we be able to see slides or something?
Oh, are you serious right now? You're not seeing that? Yes, I appreciate you jumping in right now. And let me just do that real fast. Which screen are you seeing right now?
So now what? We got it.
Okay, so seller credits to pay for commissions and closing costs. So you can offer a higher price and roll in the closing costs, but the seller is still paying that, right? But that's going to affect your appraised value. So if somebody asking 550 and you say, well, I'll give you 565 to pay for my commissions, that type thing, appraised value comes into a play. This is going to be something that a lot of people jump to do. Now, keep in mind, if you do this option, what is your next step? And it's let me run that loan in through the system to see if we can get an appraisal waiver at that higher purchase price. So you know going into it, if there's going to be an appraisal value issue, we can get that waiver moving in. So this is some of the things we did last COVID years. Remember those where we went above ask on everything? I can run it before you make an offer to see if we get an appraisal waiver. I have a very unique ability to do that through the software we have with my mortgage company. Most people can't do that. So keep in mind, I can run that before you make the offer. So if you want to increase the price of the home to absorb and pay for that commissions, we can do that. But let me run that to get the waiver prior. Again, you have to do 20% down or more to get that appraisal waiver. Just take a note of that, only on conventional loans.
Sean, but the question is, can we put anything about commissions on an offer? And I don't know that we can do that.
Right now, I don't know what the ruling is going to be for many different pieces, but you can claim it as closing costs. But remember, this is not going to be going into effect until July. So between now and then, there's going to be a lot of more information coming through. So it's not needed right now, but you can consider it a closing cost because it is a cost to the buyer for closing. So a lot of that is going to be, the devil's in the details is going to be coming out over the next several weeks. And again, if the courts allow it, and there may be a variation of it, who knows? But yes, good question and very good way to note that, because we're going to see a lot coming through this next couple of weeks of the verbiage required on contracts. So it's going to be very interesting.
Sean, can I ask something really quick?
Absolutely.
So this all started in Missouri, right?
Yep, the 1 point something billion.
Yeah. And I don't know how long ago, and I'm interested to maybe call on some agents in that region, and just see how they have been obviously dealing with this much longer and how that's working out over there. I'd be interested
Sure.
if it's implemented there already.
Yeah. And I'm not sure if it's actually gone into fruition over there, or
Oh,
if
okay.
or if it's just a lawsuit that was created to then take the next steps to the federal level. So
Yeah, because this is a class action lawsuit that goes into effect in July. So I don't think, I mean, I've not heard anything that it's already gone into effect anywhere.
Yeah,
No,
we can
it
definitely
hasn't
see
gone
who
into
has.
effect anywhere. It's, nobody knew if they were going to, just have this thing going on for years in, fighting it. But when Keller Williams caved and I don't remember the other one, then I think NAR kind of thought we were going to have to put something out there to settle this instead of doing, can't think of the word, but
Yeah. Now NAR is going to have to make a payment. I think it's a 5-year payout on this 418 million. So
yeah, it's 5 years.
Yeah, it's going to be interesting to see. And there are some people, there are brokerages that are still in the mix of the lawsuits. I know that Berkshire is one of them, but it's going to be interesting to see how it all is shaking out. But as a listing agent, we need to make sure we're setting proper expectations for the sellers as well, as far as what that negotiation is going to be like for the buyers coming in. Like what will those offers look like now that this has changed? So that setting expectations to the seller is going to be an important piece as we move forward as well. So now, again, we don't have to go out and do this on every transaction now, right? This is just getting prepared, what's coming through the pipe, to make sure we are set up for success. We set up everything properly. We understand what's coming, and then we can better position ourselves to be the experts for our buyers and sellers. So I believe the lower priced homes and lower income buyers will be hurt the most. And I honestly believe that, because there's not, first of all, there's not as much flexibility in the price for people that are having a home in the lower price range. Their loan may be a higher loan amount. Who knows? There might be not enough room for specific certain scenarios to cover all of the closing costs and to cover the real estate commissions. And buyers in that price range, from what I've noticed over my years of doing in mortgages, are a lot more strapped for cash, and they need those zero down options. They need the very low down options, and to throw a commission on top of the normal closing costs will definitely hurt. So it's going to be interesting to see how that shakes out on the lower priced homes and the lower income buyer. And I think that's what unfortunately is going to be hurt the most as we move forward with this. But we'll soon see. But I think now zero down loan products are going to be more needed than anywhere else. Like conventional already allows 3% down as a traditional lowest down payment for conventional. FHA is 3.5% down. There's grant programs. There's a lot of programs available. We do have a zero down conventional. We do have a zero down FHA already. So we may be using those a lot more. Unfortunately, when you do zero down, the rates are a little bit higher. Not as bad on our products, but the grant programs are significantly higher. The new Home in 5 program, though, is a lot better than it was. So that new changes came out on that. So I'll have to do a new presentation on that program, because I think it's going to be needed a lot more now than it ever was.
And I'd like to say, because it will change, it would change most for those lower priced homes.
Yeah.
This ruling will probably change that part of the business less. Like if we communicate to those sellers, hey, a lot of the buyer pool is going to need some help, So I think that we can adjust and educate.
Absolutely. And that's where knowing who your buyer pool is as a listing agent, setting proper expectations is going to come in real handy. Because if you're a $350,000 home and you're in the Scottsdale area and it's a 1 or 2 bedroom condo, you're going to get investors and first-time home buyers, right? So those first-time home buyers, you're going to know they're not going to have as much. But anyhow, yeah, great point. This document right here that I'm showing you is the chart as to how much the sellers can contribute towards closing costs. Now, whether or not this will change is yet to be seen with Fannie Mae, with FHA, with Ginnie Mae, and with all of the lenders that are out there. But this is the baseline right now for what you can ask for from the sellers. So if you're putting less than 10% down, the most you can ask for is 3. So if you're looking to get paid a full 3% commission and the sellers are not going to contribute anything, then, well, let me rephrase that. If you're putting less than 10% down and you're looking to get paid and you want the sellers to, the max they can give is 3%. But if that not willing to give anything, you would have to charge that full from the consumer, from the buyer. 6% on 10 to 25% down, and up to 9% can be given by the seller if you're doing more than 25% down. Investment properties are only 2%. So this is going to be very important for you to really help figure out what you can do by asking the sellers to cover any of the commissions or closing costs. This is going to be your best friend moving through. Now, I think this is going to change. But for now, this is what you can kind of expect to see. Right now, this is in play. So if there's anyone out there that is saying that is trying to adopt these rules now, you can reference this for closing costs or anything else moving forward. So if you want a copy of this, it's going to be here. You can screenshot it. I'll send it to you in the email that I'll send, in the follow-up email with a link to this review. But this is going to be very, very important for everyone to know how much we can ask for.
And Sean, have you heard anything that the VA would change the definition of closing costs to include commission where it could be used?
There's nothing yet. I'm sure it will. It's going to have to. I mean, it's a part of our life now. This is in July, right? So I think everyone will. There's going to be changes across the entire industry, multiple changes. So this is a pretty big shakeup as far as what everyone has to do now on all of the rules and regulations moving forward. There may be two separate columns. There may be max closing cost contribution and then max commission contribution. We may have two. It's going to be really interesting to see how that shakes out. But for now, this is what we have, and we're going to see how this morphs into something new as we progress in the next couple months. So just really interesting. I thought this was going to take a lot longer than than this. I thought maybe next year this would pop in and be something that we had to deal with, but it came faster than I think what everyone expected. All right.
Sean?
So yes.
Sean,
Yes.
will you have, are you working on a form for a transaction for realtors, where in the loan status report, the pre-qual, is there going to be included a line for commissions, or is it just going to be rolled into closing costs? And then how will that affect the appraisals? Because if a realtor has their own buyer broker agreement, and that, the price is $550, and they're paid outside of the price, the purchase price. So how would that work for appraisers, because they do not see the settlement statement? The appraisers don't. How can that be recorded as adding 3%? That's going to put the onus on the appraisers.
Yeah,
right.
I mean, it's gonna be based on purchase price, right? So that's going to be a problem. As far as the pre-qualification and the loan status updates, that's an AAR form. It's an Arizona Association of Real Estate form. We just follow that. We're actually not party to that. So once all of the shakeup kind of gets settled as far as how and what we can do, those will be updated, I would imagine. There is a box there that says seller is reliant on seller concessions. And then within the contract, we're going to see what those laws are as far as what we can ask for in a contract, that verbiage that we discussed. Can we ask for two separate things? Seller to provide 3% towards commission, seller also to provide another additional 1% towards closing costs. Is that something we can put separately? Will it be together? Will it be considered closing costs? Those are all things that are going to be coming up, but I guarantee you it's going to be changed on that AAR form for the pre-qualification and for the loan status update. But,
right. So I guess the MLS is going to add another line to the MLS form, or just data for buyer commission.
It's not on there at all.
But after
for
the appraisers,
it can't be on there at all. It can't. The commissions can't be on the MLS at all anymore.
Amy,
yeah, so that's going to be really hard for an appraiser to determine how much really that the buyer paid for that.
Yeah, we'll see it in the contract. They'll read through the contracts, so they'll see it just like they do seller concessions and everything else that's on there now.
No, I'm talking about the recording of so appraisers use other comps.
Correct.
So that's where
the only way it would affect the purchase price is if you wrapped the commission into the purchase price. It's not going to be that way every
If
year.
the purchase price was $550.
Well, I think what Amy's saying is when they're comping the different properties, they're not going to know what got wrapped in where and what was the true cost.
Exactly. Yeah.
But if the properties, if it comes back, I think we're overthinking it. When we look at comps and something says it's sold for $565, that property is worth $565. Yes, so there's some adjustments. So that's going to be the comp. I don't think they're not going to look into it like the devil's in the details for that sale. Like they're not going to look at that sale and go through every last nick and cranny of the previous contracts. They're going to use it as just a standard comp. So I think I may get an appraiser on here to talk about that, because that's going to be
a good idea, because we will want to know how they're going to work that out, where the appraised value is what it is right now, and usually it's 3% in the buyer broker rolled into the price. So now if it's separated and everybody has their own buyer broker agreement and is paid just on the settlement statement and it's not recorded anywhere, what is an appraiser supposed to do?
Yeah, I honestly think the buyer broker agreement is going to be more standardized moving forward. I think that a lot of attorneys are going to get involved to make sure that they're really buttoning up everything. And there's going to be a more it's going to be a lot more robust than it has been in the past. But yeah, it's a lot of things are going to be happening through this. And I think the appraisal is key. Obviously, if you ask more than, if you make an offer higher than the list price, that's going to be an issue. But we'll see how that all shakes out. But very good point. Absolutely a very good point. So any questions before we jump into what interest rates are doing? Because this is, I'm going to do a follow-up here, and we're going to do a panel, a Q&A panel on this. I would say probably the beginning of next month. So I'm going to get a couple of experts on here to really answer some really nitty-gritty questions. So I'll promise
I
you.
just have a little questions. I did see the
Sure.
VA was at 2%. Let's just say we have a VA buyer and we have a buyer broke that is over that 2%. And I don't understand the different. Okay, the 2%. Explain to me the difference on the VA between the 2 and the 4.
So the closing cost prepaid items and discount points, but all can be 2%. All of the remaining items, including on VA, you can actually. Sorry, there's like a bird in my ceiling. I don't know if you guys can hear that. You can actually pay off debt through the VA as well to qualify. But if you choose up to 4%, you can't include the debt. That's all that means. It is up to 4%, but if you include debt to be paid off, you're limited to 2% in the closing costs.
Okay, so
Sean, right now, can you even have a buyer broker with a veteran because they're not even allowed to pay the buyer agent commission?
that's my question.
Yeah, like I said,
Thanks
everything's
for
going to
sure.
be changing. Everything's going to be changing. So the VA and some of the down payment assistance programs, and there's a lot that's going to be changing. I would imagine that the VA is going to have to change that, and it's going to be considered a traditional closing cost. But yeah, those are some of the big questions that are going to be shaken out in the next 2 months. Well, what is it, March, April, May, June, July, 4 months. So that is definitely something that is going to be interesting to see. But we'll see. Like I said, everything's changing. Right now, it's 4% total, but if you ask for debt to be paid off to qualify, 2% can only be used of that total towards paying closing costs. Does that answer your question? The future question is, how are they going to pay for it at all, right? That's the next question, but we'll figure that out. It will change. And again, this is going to change pretty dramatically, I believe, in the next several months. Can you hear that bird?
Nope.
Sean, somebody's
What is it,
in the
Lucky?
hallways trying to fix it. It's our building gone crazy or something. I don't know.
I don't know what it is. It sounds like a bird, but hey.
It's awful.
All right, so let's get into the mortgage rates right now to see what's going on here. So we had a pretty bad week. I said, here's what happened last week. This was the mortgage-backed securities on last Friday to today. So right now we're hovering on this 100-day moving average. We lost a lot, and there was rumblings that the inflation numbers were coming hotter than expected. So kind of like they were preparing for it. And then this is the day on Thursday when the inflation numbers came out, and boy, howdy, did they come in hotter than expected. It wasn't horribly hotter than expected, but it was pretty significantly higher. So we lost a lot of room. So last week, a couple days in a row, we saw some really bad rate deterioration. Rates got beaten up pretty good. And then we're holding off right now. I believe we're going to push through this with the news that the Feds are most likely going to have only 2 cuts now instead of the 6. So think about this for a minute. October last year, October, November, December, everyone was expecting the Feds to cut 6 times in 2024. And then it went to 4. And then inflation was stickier, and then it went to 3. And then 2. So inflation is a lot stickier than they thought. And part of it is energy. It's expensive right now. Gas came down. Now it's on its way back up. But there's a lot of factors in here that are keeping inflation steady or actually going up a little bit. That's going to be really, really interesting to see. So we'll talk about what's happening this week with the Feds talking, but Wednesday is going to be a very important day. But I think we're going to see a little bit more deterioration before we get a bounce backwards. So it's kind of interesting. But here's the headline. Here's the information on the inflation that came out. So right now, the CPI was at 3.1. The core year over year is 3.8. Excuse me. Remember, we're expecting, and the Feds want this to get down to 2%. So 2022, we were at 9.1 for the headline as the high. The core is at 6.6. So we are making progress, but we're not. We actually went up a tick. If you see this chart, we went up a tick in the CPI, and then the core has come down just a little bit, but only because we replaced a really low number or a really high number in the past. So we're better, but it's a lot hotter than expected, and this is what is causing the rates to spike a little. So it's not good. So what is the Fed looking at? So on Wednesday, they're going to be talking. Employment, I think, is going to be their biggest thing that they're going to be looking at moving forward. So jobs current unemployment right now is at 3.9%. The Feds want that unemployment rate to be at 4.4. So they're going to hold that. They're going to hold the Fed funds rate higher for longer to put more stress on the markets to get that unemployment rate higher. They want the unemployment rate higher. So how do we get there? Through less jobs being offered or by more jobs being cut. So right now, initial jobless claims came in at 209. That's $1,000 lower. So that was not the way we wanted to go. But continuing claims actually went up 17,000 to 1.8 million. That's people that are on unemployment that continue to file for unemployment. But I don't know if you remember, but when I talked about this a couple weeks back about employment numbers, they're always exaggerated. And then there's a reworking or a revised number. Well, last employment numbers, it was over 300,000. They revised that number down by over 30%. And by 112,000, they were wrong. So if we had, when rates had a little spike a couple weeks back, if we had number came in the 200s, rates wouldn't have spiked. That's the problem we're seeing. Like these inflated numbers are coming out, and it's looking good for the economy, and then quietly they're revising them lower to where they're actually at. So everyone thinks the economy is booming. It looks really wonderful from the media standpoint, and then they're quietly revising the unemployment numbers and the new employment numbers lower. So unemployment is gaining, it is going up, and that's what this graph is showing you at the bottom here. The unemployment rate is actually going up a little bit. But the media, what they're saying is different. So we're on the right track, but the Feds are going to be careful what they say on Friday. So let's see where interest rates are right now. So we were back in the 6s a little while back. We spiked back up. We're now in the 7s. If you have a really good score, you're in the low 7s. Again, this doesn't account paying any extra fees for points to buy it down. You can get into the 6s pretty easily still with paying some points. 740 to 750, you're in the lower 7s. And then once you get into lower credit scores, you start to see those conventional loans, those rates really start to get higher because there's more risk involved with the credit scores this low. And then we see FHA and VA being a little bit better than conventional as always. So interest rates are higher. Unfortunately, last week's inflation numbers did not do us any favors. But keep in mind, everyone was expecting, including myself, I expected March Madness because they were saying they're going to have already 1 or 2 cuts by March. And now they're going to have 2 cuts for the entire year. So a lot has changed. Nobody was right with inflation, a lot stickier than expected. Only 2 more changes is what's expected the Feds to say at Wednesday's meeting for the rest of the year. So that may not come until 4th quarter. So a little bit higher for longer is kind of what they're expecting. But let's look at what the national market update is real quick. So there are a lot more buyers right now. So the demand for mortgages rose up 7.1% for the week. So that's good. That's more applications coming through. But inventory is also clearly picking up. There's a 21% increase year over year. So we were in a really low inventory. We're not in a position where it's bad inventory right now or like over inventory. We're still a lot less than we need. But it is interesting to see that it is coming up now. So here's what's happening this week. So you can kind of know what's going to be the big market movers. We've got the Bank of Japan talking about their interest rates on Tuesday. And then we have our Feds on Wednesday. Those are the big items. Mr. Powell, he's going to be speaking Wednesday afternoon. So what he says is actually more important than what their decision is. Obviously, they're not going to raise rates. If they do, that would be interesting. But nobody thinks they will. Bank of England is coming out on Thursday. So a lot of the federal agencies or federal monetary groups are going to be speaking globally. And so we're going to really have keep an eye on that. And then Thursday, also initial jobless claims. We'll have to really watch that to see how those come out. Again, they're always inflated the wrong direction and then revised lower. So we'll see how this comes through. But there's your Monday morning update. If you guys have any questions, I am open to answer any that I know that I can answer at this point. So let me stop my share real fast, and then we can jump in and answer any questions that you guys may have regarding the new NAR rules for mortgages and kind of how that affects, or with the current market rates. Any questions?
Thanks for everything, Sean. Appreciate you.
I'm sorry you missed the first few slides. They were boring. I said everything that was on them anyhow, so that wasn't too exciting. But thank you for reminding me that I missed that the slides weren't showing. So thank you very much to everybody. And I'll stay on here just in case. If there's any other questions, I'll go through the chat to see if there's anything I missed. And there's a lot of misrepresentation of what's really happening out there. A lot of different people are saying different things. So we're just going to have to see how this shakes out. Yeah, it's going to be really, really interesting. A lot of comments in here. Fed cuts are falling faster than buyers' commissions. That's pretty funny.
Sean,
Yes.
Say something. Oh,
go ahead.
oh, okay. I thought, and maybe I didn't understand it correctly, but I thought that the whole lawsuit also was about the sellers paying an agent, the buyer's agent that's not really like on their team, right? The one that's going to come to negotiate the price down, asking, the inspections and all of that. So I guess I didn't know that dual agency, why would that still be allowed?
I think it's going to be
you're still paying the buyer's agent, and we're not kind of on the seller's team. That's what I thought the whole lawsuit was about as well. I had heard that a long time ago.
Yeah, now it's complete. We're basically separating buyers and sellers completely, is basically what this is doing. You can still do it, I believe, within the same team, and with you can still work both sides of the deal. The main issue is that commissions are no longer going to be posted and preset. They're going to be fully negotiable. So whoever the buyer's agent is, it doesn't matter what team they're on, that commission is going to be fully negotiable.
But if it's in concessions, the seller pays me in some kind of form of concessions, it's still coming from the seller.
Correct. That's fine.
And yeah, I get that. I guess or now I'm the listing agent and a buyer, we're going to see all these buyers come to us, to represent them because they don't have a buyer's agent, but now you're going to be back in that same situation of dual agency, and
that's fine. As long as it's not, you can fully negotiate your commission. You can still do 6%. You can still do 3% on the sell and 3% on the buy side, as long as it's outside of the MLS.
Yeah, the main thing is that the sellers felt they were forced to pay something just to use the MLS.
Understood. Yeah.
But it's going to be interesting to see how it all shakes out, especially with dual agency. But again, it's just negotiated outside. So you can do a flat fee. Some people are talking about doing flat fees for buyer side transactions. It's been like this in Australia for the last 15 years.
And like all of Europe. And the I forgot what I was going to say. Sorry.
It's very similar to how commercial real estate is, as far as the negotiations of everything. But at least that's what I've been told, because I don't do commercial. But I saw a few podcasts on commercial people saying, listen, this is kind of how we We've done it for a long time. Everything's negotiable. And
So-
again, you can advertise it outside of the MLS. This is going to open up a lot more pocket listings. I mean, this is going to change the way we do real estate. That's for sure. Is it bad? Is it good? Who knows? But it's definitely going to change it.
Sean,
Yeah.
what is actually happening in Australia? Are a lot of buyers just going in unrepresented? What is the reality of how it's operating?
Sure. So good question. I actually had a coach who was from Australia, coached me for a number of years, and he gave me the insight on that. But basically, what they're doing is flat fees for buyers, or they're going right to the listing agent and negotiating with them. And a lot of times, because they're going right to the listing agent is going to have all of the power. So they can just do it for 3%. They can do it for 4%. They can negotiate that however they want. But a lot of people are just going directly to the listing agents. So my advice is become a listing agent, still work with buyers, obviously, but you're going to have a lot more power focusing on the listing side of things. And that's where you want to be. So as a listing agent, you can direct everything, especially now that with these new rules coming into effect.
The only other thing in the this is not my brainstorm, but in the podcast that was up yesterday, there are tons of industry. Think, homes.com, Zillow, realtor.com that sell leads. They have built their whole business model on selling stuff to buyers agents.
Yeah.
So that's going to get really interesting. And then also a relocation specialist that take 35%. All of those there's agreements out there that they get a portion of your commission. And I guess if you have no commission, they can't get a portion. I don't know.
Yeah, it's going to be a lot. I mean, you look at I saw an article where they were doing what the balance sheet and what the overall profit and loss for Zillow is going to look like in regards to now, if they're making less on the buy side, how they're going to have to change their entire platform as far as cost of leads and everything else because of this. It's going to be really interesting to see this all shake out. But yeah, those are all very, very big changes that are going to be coming through for everyone in those arenas. And it's going to be really interesting to see how it all shakes out. But it's definitely changing. We need to be our ears to the ground. We need to be not listening to the media, but actually going to the resources and making sure we're experts for our buyers and our sellers, so they know exactly what is real and what's not. And we need to sharpen our skills now more than ever, because this will push people out of the industry. It's expected that 20 to 50% decrease in the buyer's agent compensation is going to what to expect. So that's a pretty big hit. Those are just rumors because we don't know, but who knows how it's going to affect you. But again, it may not affect anything. People just may work it all in because that's what we're accustomed to. Who knows? And we'll see how this all shakes out. But it's very interesting. Crazy March, that's for sure.
Yeah. Well, in my opinion, if these attorneys are so concerned about what the consumer pays, there should be tort reform and caps on what they can get paid.
Amen, Carla.
Amen.
Amen.
Yeah.
So that was my question. Sean, do you know about when this is going to go through the courts and be solidified? Is that the July date or?
Yeah, it's going to be my mid-July is the finalized date that it has to be completed.
Okay.
So could be before, could be, but mid-July is the day it takes effect.
Well, as someone who has consistently used a buyer broker agreement for over 2.5 years, I'm way less scared, I feel like, than most of the industry.
Yeah.
As Sean knows, I have buyers that pay part of their commission consistently. So it's just going to be a matter of negotiating. And I did put a couple of books in the chat. If you guys haven't read Crucial Conversations, that's a great book for everything, even bids or negotiations. And then obviously it's Never Split the Difference by Chris Voss is I've listened to that 6 times. So, and then as far as people leaving the industry, I don't want to offend anyone on here. I'm just stating facts. The average age of a realtor in Arizona is 57. And I think obviously once you're in the industry longer, maybe burnt out a little bit, wondering how you're going to kind of stop the business anyways and retire. and not want to learn new things like or change your ways, we are probably going to see like a big decrease in our agents on our realtors here. And so that's one like very first value proposition is that you're still here, you're a problem solver, you're creative, and we can just keep moving forward, you know?
Yeah, for sure. For sure. That's true. You know, the same thing's happening in the mortgage industry. It wasn't because of NAR, it was because of rates. So when rates went up to 8%, since then, the amount of loan officers in our industry is down by, it's just cut in half. So I think that's going to continue as well. This next 6 months, you're going to see a lot of changes in the mortgage industry because of just the expense of keeping loan officers on your payroll when they're not originating loans. But I'm going to be here for the long haul. I'm not going anywhere. And I know a lot of people are. So we'll continue to keep you updated on any of the changes and all of the changes that are happening in our industry. And I'm going to put together a panel, Q&A panel here shortly. And it's going to be really, really good. So enjoy your week, guys. Have a great Manic Monday. And I'll stay on here just if you have any further questions. But if you have to get off, enjoy your day and we'll be in touch.
Bye, guys.
We'll see you. Thanks, Jennifer.